Hi everyone, and welcome to this quick information video on the PDS Trader Trade Finder functionality. And what I'm going to do is I'm going to start by with the login page. And when you log in to PDS Trader, this is what you'll see if you're a Covered Calls subscriber. You'll of course see the signals, and you can look at the last 5 updates, or you can look at them all, the history of them all, by clicking on this little eyeball. But the Trade Finder is down below. It's under the System Strategies category. And if you look at the covered calls below $50 reduced, that's what we're going to be looking at. And you just come over here and you click on the View Opportunities for this strategy. And depending on how long your internet speed is, it's going to take anywhere from 15 seconds to maybe as long as 45 seconds to come up with all of the opportunities, because it's coming up with all of the opportunities for the following expiration dates. And as you can see, these are all divided by expiration day. So we have 213, 215, 222, 31, 315, et cetera, et cetera. Of course, 213 is a Wednesday, and the only option or the only market that has a Wednesday expiration option that's priced less than $50 is the VIX. So you'll only see those opportunities there. So I'm going to click on the 215 tab. And as you can see, there are 453 opportunities that it is revealing with regard to the covered calls that's on stocks below $50. Now, to begin with, it lists all of the symbols and all the opportunities in alphabetical order. However, I can click on any of these columns and prioritize how it lists the different opportunities. So, for example, if I click on break even, I can have the best break-even trades at the top, and then it goes down from there. That's not how I do it. However, what I do is I look at the risk-reward ratio, because obviously the risk-reward ratio has to be below 3. And so a break-even of 25% does me really no good when my risk-reward ratio is up here at 40. And so this is the one that I use to sort and prioritize the trades. And so it lists the highest at the top. And so what I'm going to do is I'm going to scroll all the way down here until I get to my level of where it begins to go below 3. And so here we are at 3 right here, and it begins to give me the opportunities based on 3, the minimum risk reward ratio, and then it shows me my break even and max profit. And so I can come down here and I can see which one of these it is that I want to take. Now, again, as you go lower in the risk reward ratio, you're probably going to get some better trades here up into a certain point, but you can quickly compare these. So for example, this trade here in play, that break even is only 0.61%, but the same 2.64 risk reward ratio in CLR, which is one that we're in right now, is at 1.18% break even and 4.48% max risk. So which one is better, CLR or play? Well, obviously CLR is better, because both of these two numbers are better when the risk reward ratio is equal. And likewise, the play in NKTR, just from a purely statistical outlook, is a little bit better than the play in CLR. And one of the better ones, and I'm actually in this in a different strategy, not with my covered calls, but I'm actually in DUST, DUST, in a different one, but it is very good as far as the opportunity in a covered call. Now, you'll also notice that some of these have expirations, or excuse me, earnings releases coming up. Those are the ones that are more risky. Those are the ones that can make the bigger move. And you'll notice here, like for example, UAA, which is Under Armour, you can see here that the break-even point is at 7.22%, and the max risk is at almost 14%. So you would have to see UAA drop 14% before you hit the maximum risk, and it has a favorable risk reward ratio. So this one might be worth taking, but you would still have to understand that there's still extra risk in this one, just simply because of the earnings that will occur, the earnings release that will occur before the expiration of this trade. Now, some of these earnings expire after the expiration, and so those would be safe with regard to the end of the trade. So again, out of 450 something odd opportunities, I'm very strict on which ones I will consider for my own trading. And I don't need that many. I only need 2, 3, 4, 5 maximum a week to do really well over the course of time. Okay, and you'll find this tool it saves a tremendous amount of time in finding these opportunities. So I hope you're enjoying it, and I will see you in the next tutorial.